Welcome back to the deep dive where we take these complex topics and we really break them down,
Yeah,
so we can all understand them.
absolutely.
And today we are diving into the world of commercial real estate with a focus on absorption.
Okay.
We're going to be looking at an article by Michael Linton and the Chicago Deal Flow team over at chicagodealflow.com.
Great resource.
And they are experts in the Chicago market.
Yes.
So their perspective is going to be super valuable for us today. And I think whether you are an investor or a business owner or just someone who's curious about how commercial real estate works,
Yeah.
understanding absorption can give you a real edge.
I think it's really a fundamental concept.
Yeah.
When we think about real estate,
Yeah.
absorption really helps us understand, that pulse of the market.
Yeah.
Is it growing? Is it shrinking? Is it kind of stagnant?
Yeah.
So it's really a great place to start.
Okay, so let's start with the basics then.
Sure.
How would you define absorption in the simplest terms?
So imagine we've got a giant container like a swimming pool, and it represents all the available commercial space.
Okay.
In a given market, absorption is the rate at which that pool is being filled or drained.
Okay.
It's that speed at which spaces are being leased or sold over a period of time, typically a quarter or a year.
So a high absorption rate means the pool's filling up quickly,
Exactly.
and that indicates there's strong demand.
Exactly. And it's usually a good sign for landlords and sellers.
Oh.
It means they can command higher rents and potentially sell properties at a premium.
Makes sense.
Conversely, a low absorption rate means that pool is filling slowly
Okay.
or even draining, suggesting weaker demand.
Okay. Now, I know Michael Linton talks about two types of absorption.
Yes.
Gross absorption and net absorption.
Yes.
So what's the difference?
So gross absorption is simply the total amount of space leased or sold
Okay.
over a given period of time. But the thing is, it doesn't take into account any spaces that were vacated during that same time frame.
So it's like only looking at the inflow of water into the pool, but ignoring any leaks or evaporation.
That is a great analogy. I love that.
Okay, good.
Net absorption, on the other hand, gives us the full picture.
Okay.
It factors in both the spaces that were filled and those that became vacant.
Right.
So it's like measuring that net change in the water level of our pool,
Right.
accounting for both inflow and outflow.
So net absorption is a more accurate reflection of what's actually happening.
Precisely, it tells us whether that market is truly expanding or contracting,
Got it.
or simply, experiencing a churn of tenants.
Okay, so can you give us like a quick example to really illustrate this?
Sure. Let's say we have a hypothetical office building with 100,000 square feet of rentable space.
Okay.
Over the past year, 20,000 square feet were leased to new tenants,
Right.
but 10,000 square feet were vacated by existing tenants.
Okay.
So in this case, the gross absorption would be 20,000 square feet,
Right.
reflecting only that space leased, but the net absorption would be 10,000 square feet.
Right, because you're subtracting.
Exactly, 20,000 minus 10,000.
Got it.
Which is the actual increase in occupied space.
That makes perfect sense.
Good.
So why should someone care about these absorption rates?
Yeah.
How do they impact things like rental rates and property values?
So high positive net absorption rates typically drive up rental rates.
Okay.
And property values, it's classic supply and demand, right?
Yeah.
When demand for space is strong and it outpaces supply,
Right.
landlords have more leverage to increase rents.
So a booming market with high absorption
Yes,
leads to a seller's market.
exactly. Where property owners have the upper hand, conversely, in a market with low or negative net absorption, where supply exceeds demand, tenants have more negotiating power,
Interesting.
and property values might stagnate or even decline.
So it seems like understanding absorption rates can be a powerful tool for anyone looking to invest in commercial real estate,
Absolutely.
or even for business owners looking to lease space.
For sure. I mean, Michael Linton, in his work with Chicago Deal Flow, often emphasizes the importance of, absorption analysis.
Yeah.
In making informed decisions, savvy investors use absorption rates to identify promising markets,
Right.
evaluate potential investments, and even time their entry and exit strategies.
Wow. So this is really,
It's a key metric.
a key metric.
Yeah.
So we're going to dig more into that after a quick break.
And we're back.
Yes, we are. And I feel like we've got a good grasp of the basics now.
Yeah, I think so too.
But I'm curious about taking it a step further,
Okay.
looking beyond those raw absorption numbers.
Absolutely. I think that's where it gets really interesting.
Okay, so what do you mean by that?
Well, let's say we're comparing two different areas in Chicagoland,
Okay,
maybe the Loop
okay,
and a suburb like Naperville.
okay.
Both might have similar net absorption rates, just on paper.
Right.
But the underlying reasons for those rates
Yeah.
could be vastly different.
Okay, so we need to dig deeper.
Exactly. We need to look beyond just the surface level numbers.
Right. So what kind of factors could be driving those absorption rates?
Well, there's a whole web of influences,
Yeah.
economic growth, industry trends,
Okay.
even demographic shifts.
Interesting.
In the loop, a high absorption rate might be fueled by a surge in tech companies moving into the area,
Right.
attracting young professionals, driving up demand for both office and residential space.
So there's a story, a narrative
Exactly.
that adds context
There is a story.
to those numbers.
100%.
Okay.
But in Naperville, a similar absorption rate could be driven by something entirely different,
Okay.
like an aging population looking for larger homes with more amenities
Okay.
that could lead to, increased demand for retail and healthcare spaces.
So the same absorption rate in two different areas could tell two completely different stories.
Precisely. And that's where I think Michael Linton and his team at Chicago Deal Flow excel. They have their fingers on the pulse of the Chicago market,
Yeah.
understanding, the unique dynamics of each submarket,
Mm-hmm.
what's driving those trends. They don't just look at the numbers.
Right.
They dig deeper to understand, the underlying forces.
So it's like the difference between, reading a weather report
Yes.
and actually understanding the complex meteorological systems
100%.
that create those weather patterns.
That's a great way to put it.
Right.
And this deep understanding is what allows investors to make more informed decisions.
Okay.
They can assess not just the current absorption rates,
Right.
but also the long-term potential of a market.
Okay, so how would an investor practically use this absorption data
Right.
alongside this Y factor?
So let's say an investor is considering a value-add opportunity in a particular neighborhood.
Okay.
They might look at the current absorption rates and see they're relatively low.
Okay.
But after doing some research and
Yeah.
perhaps, consulting with Michael Linton and his team, they discover that a major infrastructure project is planned for that area.
Interesting.
And that project is likely to attract new businesses and residents,
Okay.
driving up demand for space in the future.
So even though the current absorption rates might not be great,
Yes.
there's future potential.
Exactly. That's the power of combining, data analysis
Right.
with a deep understanding of the market's dynamics.
So we've talked about how absorption rates impact like rental rates and property values.
Yes.
But what about the perspective of a business owner?
Yeah.
How could understanding absorption benefit them?
That's a fantastic question. Let's imagine, a restaurant owner looking to open a new location.
Okay.
If they target an area with extremely high absorption rates,
Yeah.
it could be a double-edged sword.
Okay, how so?
Well, high absorption suggests a strong market,
Right, which is good.
which is great, yeah.
Yeah.
But it also means competition for space will be fierce,
Right.
potentially driving up rents,
Yeah.
making it harder to secure, a favorable lease.
Yeah.
They might end up paying a premium for a space in that highly sought-after location.
So it's almost like this popularity contest for real estate.
You could say that.
Interesting.
Conversely, if they choose an area with lower absorption rates,
Yeah.
they might find more affordable options,
Okay.
have more leverage,
Yeah.
in negotiating their lease terms.
Right.
However, they need to carefully consider why absorption is lower in that area.
Right.
Is it a temporary dip, or are there underlying challenges in that market?
So it's about finding that balance
Exactly.
between a good market
Yes.
and
The healthy market.
a healthy market with reasonable absorption
Reasonable absorption.
and your specific business needs.
100%. And that's why I think, having access to experts like Michael Linton and the Chicago Deal Flow team
Yeah.
can be so valuable. They can
Yeah.
provide that nuanced, localized perspective
Right.
that helps businesses make informed decisions about where to locate and how to navigate, the ever-changing dynamics of the commercial real estate market.
All right, because every market's a little bit different.
Exactly.
It seems like we've gone from, these basic definitions all the way to,
Yeah.
like a pretty nuanced understanding
More in-depth understanding.
of this really important concept.
Yeah, absolutely.
So before we wrap up,
Yes.
let's bring it all together for the listener.
Okay.
And I'm the listener right now.
Good.
And I'm saying, okay, this absorption thing sounds interesting,
Uh-huh.
but how does it really apply to me?
That's a great question. I would say, whether you're a seasoned investor or a first-time home buyer or a business owner looking to expand or just someone who's curious about the world around them, I think understanding absorption can be incredibly empowering.
Okay, so
So imagine you're considering, buying an apartment in a particular neighborhood. You found a place that you love,
Mm-hmm.
but you're wondering, is it a good investment?
Yeah.
By looking at the absorption rates for residential properties in that area, you can get a sense of how quickly apartments are selling, whether prices are likely to, go up or down in the future.
So it's almost like seeing the future of that market a little bit.
Exactly, like getting a glimpse into the future.
Okay.
Or let's say you're a business owner thinking about opening a new retail store.
Okay.
Understanding the absorption rates for retail space in different locations can help you choose, the most strategic spot for your business, a place where there's enough demand to support your growth, but not so much competition that you'll be struggling to survive.
Right. You got to find that sweet spot.
Exactly, finding that Goldilocks zone.
And it's not just about looking at the raw numbers, right?
Right, it's about understanding the why behind those rates.
Yeah. Why is absorption high here, low there?
Exactly. Why is absorption high in one area and low in another? What are the factors driving those trends?
And that's where, resources like Michael Linton and ChicagoDealFlow.com become super valuable
Absolutely.
because they give you that local perspective that helps you understand those numbers.
100% they can help you connect the dots, see the bigger picture, and understand those forces that are shaping the market.
Okay, so to wrap up,
Yeah.
if you're looking to invest in real estate, start a business, or just understand, how your local market works, don't underestimate the power of understanding absorption.
Yeah, it's a fundamental concept that can give you a real edge.
It's like a secret weapon.
A secret weapon to make smarter, more strategic decisions.
This has been another great deep dive.
I agree.
I feel like I learned a lot today.
Me too.
I hope you did too, listener.
Absolutely.
And until next time,
Happy investing.
happy investing.